Welcome back. In the first part of Chapter 1, we covered what is a tax, who pays taxes, how we calculate taxes, and who bears the burden of the tax. In this part of Chapter 1, we're going to examine how jurisdictions assess taxes and who has the right to tax us. And again, we're going to use my own job decision and my own purchasing decision as an example to demonstrate who has the authority to tax us and how they levy taxes on us. Tax jurisdiction is the right of a government to levy tax on a specific person or organization. Now, what do we mean by government? A government is any organization that has the sovereignty to collect taxes. In this course, we're going to cover federal taxation, but we can also be taxed by state governments, county governments, and local governments, as well as special purpose entities that are created by governments and have the authority to tax. Since the focus of our class is the federal government, let's look at whether the federal government has the sovereignty to enforce taxes under each of the following job considerations. First, if I were a United States citizen who took that accounting professor job at the University of Amsterdam, would the U.S. federal government be able to tax my revenue? The answer is yes. As a U.S. citizen, regardless of where I live, I pay United States federal government taxes. In the second module of the course, when we talk about the principles of individual taxation, we'll talk about the income earned abroad considerations in the tax code. But for now, it's enough to know that as a U.S. citizen, regardless of where you're sitting in the world, you owe the United States federal government taxes to support your home country. Let's look at this case. If I were a citizen of the Netherlands who earned my salary as an accounting professor at James Madison University in Harrisonburg, Virginia, would the United States federal government be able to tax me? And the answer is yes. If I'm earning revenue within the borders of the United States, I owe the United States government federal taxes to support the roads I drive on, the schools that educate the people around me, and since my employer is a state-run institution that receives federal funds, it indirectly supports my employer in this case. But yes, if you're living in the United States borders, you owe the United States taxes. You could probably already guess the answer to this third scenario, but let's take a look anyway. If I were a citizen of the Netherlands who owned shares of a United States-based partnership designing higher education curriculum, would I owe the United States federal government revenue through taxes? The answer, you guessed it, is yes. If my business is incorporated in the United States, even if I don't reside in the United States or work in the United States, I owe federal taxes, especially as a partnership wherein the revenue just passes through to me. The similar principles apply to state governments and local governments, but they tax us a little bit differently to try to avoid the overlapping of tax payments. Let's take a look at those types of tax payments now. The federal government primarily taxes income through the individual income tax, the corporate income tax, and the estate and trust tax, which is income earned by a person who has passed away or who has specified income for a specific use. Other federal taxes include employment taxes, such as Social Security and the Medicare tax, the unemployment tax that is paid by employers, and transfer taxes, which are taxes levied on funds transferred from one individual to another through gift or estate. And we'll be talking about transfer taxes in Module 2 of the course when we go over individual taxation. Like the federal government, several states impose a state income tax on the individuals who reside in the state, as well as non-residents who earn income in the state. For example, a friend of mine works for an accounting firm and earns wages in New York State, but lives in Maryland. He pays income taxes in both Maryland because he lives there, as well as New York because he earns revenue there. State income tax also covers corporations that perform business in the state. If a corporation does business, that is, has headquarters and employs persons in multiple states, they pay tax in all of those states, which can make the tax function tricky. Most states earn tax revenue through the use of sales, use, and excise taxes. An excise tax is a flat tax on a percentage of revenues. The state of New Mexico has one of these. Sales and use taxes are complementary. A sales tax levies a specific rate on a purchase. In Texas, the sales tax rate is 8.25%. A use tax ensures that the state in which the product is used captures the revenue from purchasing the item. And we'll get into an example of that in a second. The important thing to know about retail taxes and use taxes is that you're held to the higher tax in the state in which you reside. Let's take a look at what that means. So if I purchase my Corvette in the state of New Mexico, which has a sales tax of 3% of the purchase price, and I bring my Corvette here to Texas, which has a use tax of 6.25% of the purchase price, what do I owe the state of Texas? New Mexico is going to take 3% of the $69,500 purchase price of my Corvette, whereas Texas, if I had purchased the vehicle there, would have taken 6.25% of the vehicle's purchase price. This means that New Mexico, upon purchase of the vehicle, collected $2,085 from me, whereas Texas would have purchased $4,300 from me on the purchase. Since I've already paid 3% of the vehicle's price to the state of New Mexico, the state of Texas only requires the difference from me, an amount of $2,259. Let's look at another example. Say, for example, if I purchase my Corvette in California, a place where I can drive my Corvette up and down the coast, and then brought the Corvette back to Texas with me, where my job is. If I had bought the Corvette in Texas, I would have paid 6.25% on the vehicle's purchase price, which we already calculated was a tax of $4,344. The state of California, however, would have imposed a 7.5% tax on me. 7.5% of the vehicle's purchase price is $5,213. If I bought the Corvette in California to be used in Texas, I would have to pay the vehicle registration fee, but I would not have to pay this use tax portion because what I paid to the state of California already exceeds what the state of Texas would have gotten from me. I should have just bought the vehicle in Texas. Local governments typically rely on real property taxes and personal property taxes to fund their operations. Taxes on real property include the land, the landscaping, the buildings, and anything affixed to the land that sits within the local government's jurisdiction. Personal property is anything tangible that is not real estate. For example, my car. Personal property is a little bit harder to tax than real property. Real property is assessed by a property assessor, and these taxes are paid typically annually. However, personal property can be relocated within the jurisdiction or outside the jurisdiction. So most local governments rely on real property taxes rather than personal property taxes because it's easier to track and trace. Some local governments also impose a sales tax. For instance, when I lived in Montgomery County, Maryland, I paid a 0.25% sales tax to the county in addition to the 5% sales tax I paid to the state of Maryland. So let's test your comprehension by looking at some state and local taxes. If the state of Virginia imposed a 4.13% tax on personal property, what tax would I owe the state of Virginia for the privilege of having my Corvette there? This means that on an annual basis, I owe the state of Virginia $2,870 for the privilege of owning personal property there. Now let's look at Texas. The state of Texas imposes a tax on personal property that is used more than 50% of the time to generate business revenue. What do you think? Will I be using my Corvette to generate business revenue? Will I be using my Corvette to make sales calls? As an accounting professor, probably not. But if I were a pharmaceutical rep, or a traveling lawyer, or someone who wanted to impress my clients, I might. In which case, I would be taxed on the actual business usage of my vehicle. But since I'm just driving a Corvette because I think I would look really cute driving one, I do not owe the state of Texas a tax for the use of my personal property. Wrapping up, in this unit, we looked at who has the jurisdiction to tax me and the different ways that the federal government of the United States, the state governments, and local governments levy taxes. In the next unit, we'll look at who has the authority to tax us, where that authority comes from, and how that authority creates taxes.